looking at gold, okay, the trade that was taken during New York yesterday. So just starting on the daily time frame, all right, looking at overall direction, higher time frame momentum, higher time frame market structure, you can see that we are bullish. Okay, we have extremely strong buying pressure, and just looking at the daily time frame, we can see that we are looking for continuation to the upside. Okay, so with that being said, now we start focusing on this over here, this structure here. All of this is pretty irrelevant. Okay, so we have a look at this now, and we are focusing on this candle here, which was yesterday's daily candle, obviously. So now we map our levels out. Firstly, we identify our critical levels on the daily time frame. So we know we have a critical support over here based on the daily. We know that we have a nice critical resistance over there, which was the previous daily high. So that was Tuesday's high. Okay, and then above Tuesday's high, we've got a level in this region over here at around 1900. Okay, so if you look left, now looking at this, okay, when I had a look at price yesterday, just before New York, we had this candle on the open of that daily candle. Okay, price had pulled straight back. Price had pulled straight back, which means straight down. Okay, which means now, without even looking at the lower time frames, we sit back and we say, all right, well, looking at this momentum, we've got extremely strong bullish momentum and buying pressure. Okay, now the first half of the day prior to New York Open, when volume comes in for gold, price pulled back to retest and grab liquidity. So looking at that daily candle, it did not have a top side to it. Okay, nor did it have a bottom side. Okay, so it was a strong bearish candle. With that being said, we now know, okay, well, we can expect this candle to flip bullish and continue with that higher time frame momentum through session when volume comes in. Okay, and we will get that continuation, which is what we were looking for. So now looking at this daily, we have a look and we say, okay, well, looking at where the daily tapped, you can see that if you look left, okay, if you look left, it tapped into a nice support zone, right? So if you look left, you'll see the support zone over here. So now we dissect and we go down to the lower time frames. We move to the 4 hour and we have a look at the following. Now, this is where it becomes a little clearer. So once again, we map our levels out. You can see we've got a nice critical support over there. We then obviously have a nice critical support over here, which was untested. Untested. That's a very important point. So we had this through London. We had this pullback into this region, which is a fresh level of support that is now being retested. So break, retest, continue. So now looking at that, we can expect a reaction at this price level. So now we know, okay, now we can drop down to the lower time frames and we can just look for downside rejection and we can look for confirmation and a break in lower time frame structure. All right. So tying it all in just by looking at the daily and the 4 hour, we know that price needs to continue bullish on the higher time frames. Now we move down to the hourly. Let's take that away as that's irrelevant. Let's go down to the hourly. Looking at the hourly time frame, that was our critical support, fresh critical support that was untested. So this is the pullback that we had through London. We had our wick over there, which first sign of exhaustion. We then had another wick over there, all right? Second sign of exhaustion. So you can see that price is starting to reject the downside and we're losing steam. These sellers are losing steam. So now we drop down to the 30 minutes and we have a look at the 30 minute and what has happened over there. So now we have a look at this and we say, okay, well, looking at this, we've got a nice minor level over there. So here is our critical. Okay, here's the critical zone that we're looking at. We then have a nice minor resistance over there, just above our critical support. Okay, now we're not looking to sell because we're trading at a critical support with a higher time frame in mind. So now we know that we need to break this structure. We need to break that lower time frame structure in order to start looking for buys. Okay, and now we go down to the 15 minute and we have a look at the following. So now you can see that once again, let's just adjust the critical. You can see how prices reacted at that level over there. You can see that pullback. And looking at that structure, I've just mapped out that lower time frame or that minor resistance. Okay, we had the rejection. So remember, this was our first wick on the hourly. We then had another wick on the hourly form, and look at that 15-minute engulf. All right, rejecting our critical support region, breaking structure, breaking above or breaking this minor resistance and closing above the minor resistance. And we then had a slight pullback into that minor level, which is now obviously a minor support above our critical support. And we had the push. So that is where my entry was taken. All right, as you would have seen, stop loss was just below that engulf over there, and my target at the high. All right, that daily high. Okay, so that was the reason for entry. So yes, we were looking at a fairly wide stop of around 34, 35 pips, and a target of around, what was it, 100, call it 200 pips. All right, giving us a risk reward around, call it 6. So that was the reason for entry on gold. Okay, textbook stuff. And now going back to the daily time frame, the reason target was there was because that was recent structure. Okay, that was significant, and we could have seen a reaction at that level. So it was important to secure profit at that significant level. We then obviously had the break, and that is where price created the top side to that daily candle, and that was that higher time frame continuation. All right, so with that flip, we had price create the bottom wick on the daily time frame, and then straight into that daily high, broke the daily high, and continued pushing into around 1900, right, about 1890. All right, so that was the reason for the trade. Entry confirmation was on the 15-minute, as I've just broken down. And yeah, so textbook stuff.